Hi, my name is Noel, and today I'll be presenting my research proposal which explores how social media sentiment and on-chain blockchain data can be used to predict the price movements of a specific meme coin called BONK. BONK is a fast-growing, low market cap cryptocurrency that operates on the Solana blockchain, a network known for its speed, low fees, and decentralization. This study is motivated by recent academic findings showing that social media narratives and blockchain activity can influence crypto prices, particularly for retail-driven assets like meme coins. However, existing research has largely focused on major cryptocurrencies like Bitcoin or on meme coins on the Ethereum and Binance Smart Chain networks. There's a noticeable gap when it comes to smaller coins like BONK on Solana. To fill this gap, my research proposes a multi-dimensional model that combines four independent variables: social media sentiment, new blockchain address creation, active blockchain address changes, and wallet balance shifts, and examines their ability to forecast BONK's price changes. The study will also test whether combining these variables results in stronger predictive power than using them individually. While regression analysis will be used to assess the statistical relationships between these variables, a long short-term memory machine learning model will be employed later in the study to optimize market entry and exit points based on the identified patterns. The goal is not only to challenge traditional market efficiency theory, but also to contribute a practical, predictive framework for smaller emerging cryptocurrencies. I will now present the literature foundation behind this proposal. The research gap, the missing link in meme coin price prediction. Prior studies, such as Pan, Ula et al., and Demosthenes et al., used machine learning and sentiment analysis for Bitcoin and Ethereum price predictions. Casella and Paletto focused on Bitcoin and analyzed 6 on-chain metrics derived from the Bitcoin blockchain for portfolio allocation strategy development. Belcastro et al. Used meme coin sentiment analysis of coins on Ethereum and Binance Smart Chain, but incorporated no on-chain data. No studies combine on-chain data and sentiment analysis for Solana-based meme coins. BONK is a Solana-based meme coin that is faster and cheaper than Ethereum and more decentralized than coins on the Binance Smart Chain. The research gap. This integrated approach has not been applied to BONK or similar small cap meme coins. In the construction of my theoretical framework, I looked at behavioral finance and market efficiency concepts. Starting with behavioral finance, I looked at Shiller's work on narrative economics, which describes how market stories drive viral investment behavior. Next, I looked at Bikhchandani et al.'s work on informational cascades, which describes how imitation can distort prices. Next, I looked at Hirschliefer's work that describes how behavioral biases like overconfidence and attention can lead to mispricing. And next, I looked at Bikhchandani and Sharma's work, which describes how herding behavior causes excess volatility. I also looked at market efficiency and efficient markets hypothesis literature. First, I started with Fama's work on the efficient markets hypothesis, which is a hypothesis that states that stock prices reflect all available information and consistent alpha generation is impossible. According to the efficient markets hypothesis, stocks always trade at their fair value on exchanges, making it impossible for investors to purchase undervalued stocks or sell stocks for inflated prices. Therefore, if BONK's markets were efficient, sentiment and on-chain data would have no predictive power. Next, I looked at Malkiel's work, which describes how momentum effects exist but are difficult to exploit consistently. My research tests if such anomalies are exploitable in meme coins. Next, I looked at Lowe's work on the adaptive markets hypothesis, which states that market efficiency is context dependent, allowing periods of predictability. Next, I looked at Urquhart's work, which showed that Bitcoin was initially inefficient and gradually became more efficient. BONK might follow a similar path. My study builds on behavioral finance principles and challenges the efficient markets hypothesis by testing whether publicly observable sentiment and on-chain metrics can forecast bonk price movements. Variable identification. My independent variables are social media sentiment on the social media platform X, the creation rate of new blockchain addresses on the Solana blockchain, the percentage change in active blockchain addresses on the Solana blockchain, the change in blockchain wallet balances, and my dependent variable is bonk price changes. My goal is to discover whether a hybrid model improves predictive accuracy for meme coin prices such as bonk. Next, I will state my hypothesis. To be concise, I will not state the null hypothesis for each set and will only present the alternative hypothesis. The first hypothesis set involves social media sentiment and bonk price movements. The alternative hypothesis states that social media sentiment significantly predicts bonk price movements either immediately or 24 hours later. The second hypothesis set involves new address creation and bonk price movements. The alternative hypothesis states that new address creation significantly predicts bonk price movements either immediately or 24 hours later. The third set of hypotheses involves looking at percentage change in active addresses and bonk price movements. The alternative hypothesis is that change in active addresses significantly predicts bonk's price movements either immediately or 24 hours later. The fourth set of hypotheses involves looking at changes in wallet balances and bonk price movements. The alternative hypothesis is that wallet balance changes significantly predicts bonk's price movements either immediately or 24 hours later. The fifth hypothesis set involves looking at the combined effect of sentiment and on-chain metrics on bonk price movements. The alternative hypothesis is that the combined effect of the independent variables does significantly predict bonk price movements now or in 24 hours. The next section is Project Workflow Chart Part 1. The first section is data collection. The social media scraping tool Tweepy for Python will be used to collect X posts and comments mentioning bonk. Botometer will be used to distinguish bot activity from human activity. Cardiff NLP's Twitter Roberta model will classify the sentiment of bonk-related comments and posts as positive, negative, or neutral. The SoulScan API will be used to collect data on the on-chain metrics. Bonk was created on December 25th, 2022. Bonk price data will be collected with CoinMarketCap and Kraken APIs back to December 25th, 2022. The next section is data quality assurance. First, API failures and missing values will be inspected. Next, 7-day average imputation will be used for missing values where appropriate. Next, bots, promotional, and invalid entries will be filtered. And next, a cleaning log will be maintained for reference. The next section is data pre-processing. First, data will be cleaned and aligned. Next, metrics will be normalized using z-scores. And lastly, noise will be filtered out and data will be synchronized by timestamp. The next section is feature engineering. First, I will calculate the daily sentiment scores. Next, I will compute the daily on-chain activity metrics. And lastly, I will structure the variables for regression analysis. Project Workflow Chart Part 2. The next section is modeling. I will run simple, multiple, and quadratic regression models, including no lag and 24-hour lag models. The next section is model evaluation. I will evaluate the models using the p-values, the R2 values, and the f-test values. I will detect multicollinearity using the VIF and tolerance values. I will assess the model fit and variable influence. The next section is the LSTM prediction model. First, the LSTM model will be trained using 80% of the data. Next, the LSTM model will be tested on the remaining 20% of the data. and this model will be used to optimize market entry and exit points for trading. Lastly is insight and application. The linear and nonlinear models will be reviewed for the best fit. The most predictive variables will be identified, and the results will be generalized for potential use for newer meme coin price prediction models. Data modeling and regression techniques. This study applies 3 regression approaches to test the hypotheses. The first is simple regression, which tests each independent variable individually with the dependent variable. Next is multiple regression, which tests the combined effect of all independent variables on the dependent variable. And next is quadratic regression, which tests for nonlinear U-shaped or inverted U-shaped patterns. Justification for the choice of data analysis techniques. Securon and Bougie state that regression aptly reveals the degree and character of variable relationships. They also state that coefficients show the relative impact of each predictor. Chilai states that quadratic regression models detect patterns where price shifts are nonlinear. And Cohen states that many stocks don't follow linear trends. Therefore, it is important to test with quadratic regression because bonk may not follow a linear trend. Statistical significance and model evaluation. The key metrics used to evaluate the models will be the beta coefficients, which will reveal the strength of the independent variable's impacts on bonk's price movements, the p-values, which will need to be smaller than 0.05 to be considered statistically significant, the r-squared values, which will show how much of the variation in the dependent variable is explained by the independent variables, the f-test values for the multiple regression models, which will reveal overall model usefulness, and the correlation matrix, EIF, and tolerance values, which will be reviewed for indicators of multicollinearity. In conclusion, this research proposal intends to assess the relationship between the independent variables, which are sentiment analysis from the social media platform X, the rate of new blockchain address creation, the activity of active blockchain addresses, and the wallet balance fluctuations, and the dependent variable, which is the price changes of the meme coin bonk, a cryptocurrency on the Solana blockchain. That data will be used to train an LSTM algorithmic model to generate market entry and exit points. This proposal challenges the efficient markets hypothesis by testing whether publicly observable blockchain data and publicly accessible social media posts and comments can be analyzed to predict price movements in the meme coin bonk. The weight of this study rests on its contribution to the expanding body of literature that investigates the predictive potential of merging sentiment analysis with blockchain-based metrics. Previous research has mainly demonstrated the potential of these individual or slight combinations of factors in predicting cryptocurrency price movements, and this proposal will include a combination of independent variables and a dependent variable that has not been investigated. Integrating behavioral finance theories such as narrative economics and informational cascades provides a conceptual foundation for why social sentiment and wallet activity might meaningfully influence price dynamics in volatile and retail-driven markets. The anticipated outcome is a more accurate and complete model for predicting price fluctuations in the rapidly changing world of the cryptocurrency markets. This study will contribute to the understanding of meme coin dynamics in the cryptocurrency markets. It will also apprise investors and traders of key trading information and pave the way for more sophisticated cryptocurrency price forecasting approaches, incorporating a broader range of market signals. Thank you.